If you've been putting off buying a home because you think you don't have enough money saved, this video might completely change your mind because the number most people have in their head for how much they need isn't right. Like, really not right. I'm going to break down exactly how much money you actually need to buy a home in 2026, and I promise some of this is going to surprise you. Stay until the end because I'm going to share some programs that can dramatically reduce what you need to bring to the table. Hey guys, Kami Ketcham with Ketcham Realty Partners here. I'm a real estate broker serving Orange County and Los Angeles, California, Las Vegas and Henderson, Nevada. Today we're getting into the money side of things because this is the question I get asked all the time. How much do I actually need? Let's break it down. First, let's bust the biggest myth in home buying, the 20% down payment myth. Somewhere along the way, it became common knowledge that you need 20% down to buy a home. And I cannot tell you how many people have told me they're waiting until they save 20% before they even start looking. Please hear me on this. You do not need 20% down. In fact, the majority of first-time buyers put down significantly less than that. Now, 20% does have its advantages. You avoid paying private mortgage insurance and your monthly payment is lower. Your offer can look stronger in some situations, but it's absolutely not a requirement. And for many buyers, waiting to save 20% means waiting years longer than they actually need to. So what are your actual down payment options? Let me walk you through the main ones. Conventional loans. You can put as little as 3% down as a first-time buyer. On a $500,000 home, that's $15,000, not $100,000, $15,000. With a conventional loan, putting less than 20% down, you'll pay private mortgage insurance, which is PMI. It's an additional monthly cost. It generally goes away once you've built 20% equity in the home. FHA loans backed by the federal government, these allow 3.5% down with a credit score of 580 or higher. FHA loans are very popular with first-time buyers because the qualification requirements are more flexible than conventional loans. The downside is that mortgage insurance is required for the life of the loan in most cases, so it will cost you more per month, but you can refinance later when you have more equity in the home. VA loans. If you're a veteran or active duty military, this is the best product in existence. Zero down payment, no PMI, competitive interest rates. If you qualify for a VA loan, please use it. USDA loans. For homes in eligible rural areas, also zero down payment. More relevant for buyers looking outside of major metro areas, but it's worth knowing about. So, depending on your loan type, you could be looking at anywhere from 0 to 3.5% down as a first-time buyer. That is dramatically different than 20%. Okay, so we've covered the down payment, but that's not the only money you need. This is where a lot of first-time buyers get caught off guard, so pay attention. Closing costs are the fees and expenses associated with finalizing your home purchase. They are separate from your down payment. Closing costs typically run between 2 to 5% of the purchase price, depending on your loan type, lender, and location. On a $500,000 home, that could be anywhere from $10,000 to $25,000 in closing costs on top of your down payment. I know it's a lot, but here's the good news. There are ways to reduce this. You can negotiate with the seller to cover some or all of your closing costs. This is called a seller concession, and it's very common, especially in a more balanced market like we have right now. Your agent will advise you on whether asking for seller concessions makes sense in your specific situation and if it's common in your area. Some lenders also offer no closing cost loans where the costs are rolled into your interest rate. You pay a slightly higher rate, but you don't need that cash up front. Depending on your situation, this could make sense. There's one more upfront cost to know about, your earnest money deposit. When you make an offer on a home, you typically put down an earnest money deposit, sometimes called good faith money, to show the seller you're serious. This is usually 1 to 3% of the purchase price, and it gets credited toward your down payment or closing costs at closing. So it's not extra money, it's just money that you're putting up early at the very beginning of the transaction. So when you're putting in an offer, make sure you have this money readily available to send to escrow if your offer gets accepted. The important thing to know is that if you back out of the purchase for a reason not covered by your contract contingencies, you could lose this deposit. Your agent will work to make sure that your contract protects you. Beyond your down payment and closing costs, lenders also want to see that you have cash reserves, money left in the bank after your purchase closes. Most lenders want to see at least 2 to 3 months of mortgage payments in reserves. This isn't money you spend, it just needs to exist in your account. It's their way of making sure you won't immediately default on your loan if something unexpected happens. So factor this into your savings plan as well. If you're starting to feel like this is a lot of info, then I have a free gift for you. It's my complete home buyer checklist, and it walks you through every single step of the home buying process from pre-approval all the way to closing day. Just a clear, simple action plan you can follow and actually check off as you go. It even warns you about the most common mistakes buyers make at each stage, so you don't have to learn the hard way. Completely free. Link is in the description. Go grab it right now. Okay, I promised I'd tell you about programs that can dramatically reduce what you need. Here they are. Down payment assistance programs exist at the federal, state, and local level, and they are wildly underutilized because most people simply don't know about them. In California, the Cal HFA program offers down payment assistance to first-time buyers that can cover your entire down payment in some cases. Income limits apply, but many moderate income buyers qualify. In Nevada, the Home is Possible program offers down payment assistance for Nevada buyers, including a grant option that doesn't need to be repaid at all. Free money for your down payment. Yes, it exists. This program also has income qualifications. These programs change frequently and eligibility varies. So the best way to find out what you qualify for is to talk to a lender who specializes in first-time buyer programs. When you schedule a call with me, I can refer you to lenders I trust in both California and Nevada who know these programs inside and out. I also want to discuss new construction. If you're purchasing near new construction, like in Las Vegas, Nevada, this is a real opportunity to bring less to the table. Currently, many builders are offering great incentives to sell homes. Generally, if you use their lender, they will provide incentives that can be used towards closing costs, interest rate buydowns, or upgrades you'd like to make to the home. I've had buyers that have only had to bring about $2,000 to the table to get their new construction closed, which is a really great opportunity for a beautiful brand new home. Every builder differs with what they offer. Reach out to your local real estate agent so they can better help you understand what is available. Okay, let me put some real numbers together so this feels concrete. Let's say you're buying a $500,000 home in Las Vegas with a 3.5% FHA loan, and you negotiate seller concessions to cover your closing costs. Your down payment would be $17,500. Your closing costs covered by the seller, $0 out of pocket. Your earnest money deposit of roughly $5,000 gets credited back at closing, and you keep 2 months of reserves in the bank. So realistically, you could buy a $500,000 home with roughly $20,000 to $25,000 out of pocket in the right circumstances. That's a very different number from the $100,000 that 20% down would require, plus closing costs. Now, every situation is different. The numbers vary based on purchase price, loan type, market conditions, and what you negotiate. But this gives you a more realistic picture of what's actually possible. Now, I want to address the elephant in the room for my SoCal viewers. These numbers look different in OC and LA because home prices are just significantly higher. At a $700,000 purchase price, which is closer to entry level in SoCal, 3.5% down is $24,500, and closing costs could be $14,000 to $35,000. So you're looking at more like $35,000 to $60,000 depending on how much seller help you get. Also in SoCal, it is standard for the earnest money deposit to be 3% of the purchase price, so plan accordingly before you make an offer. That's still a far cry from 20% down, which would be $140,000, but I won't sugarcoat it. Buying in SoCal requires more savings than buying in Las Vegas, which is one of the reasons so many Californians are making that move. I have a whole video series on that topic if you're curious. I'll link it below. So to bring it all together, here's the real answer to how much money you need to buy a home. With the right loan program, some negotiation on closing costs, and down payment assistance if you qualify, you could potentially buy a home with as little as $10,000 to $25,000, depending on your market and price point. The 20% myth has kept way too many people renting way longer than they needed to. The very first step is talking to a lender to find out exactly where you stand. Your specific credit score, income, and savings will determine which programs you qualify for and what your real numbers are. And if you want help figuring that out and connecting with a lender I trust in your market, that's exactly what my free calls are for. Link in the description. Subscribe for my next video where I break down exactly what credit score you need to buy a home in 2026, because that number might surprise you too. Before you go, I want to make sure you have something really valuable, my free home buyer complete checklist. It covers every single step of the buying process in plain English, tells you exactly what to do and when, warns you about the mistakes most buyers make at each stage, and gives you space to track your own dates and deadlines so nothing slips through the cracks. I designed it specifically for buyers who feel overwhelmed by the process and want a clear, simple roadmap they can actually follow. It's completely free. Download it at the link in my description. And when you're ready to take the next step and talk about your specific situation, my scheduling link is right there too. I'd love to help you make this happen. I'm Kami Ketcham. See you in the next one.